Let me ask you a question. What is the first brand that comes to your mind when we talk about luxury sport cars? Today we are driving into the fast lane of finance with none other than Ferrari stock. Ferrari is not just an Italian luxury car manufacturer, it's a global phenomenon. Ferrari, based in Maranello, Italy, founded in 1939 by Enzo Ferrari, is not the average car company. When you hear about Ferrari, you probably think of speed and luxury. What makes it different from other car manufacturers is its ability to create a powerful image for its business. Ferrari has a lot of things going for it that makes it stand out from the crowd. For example, its operating margin is nearly 3 times higher than other car companies. While most car makers struggle to get an operating margin above 10%, Ferrari usually stays between 25 and 30%. This Italian company also makes a good profit. In the last 4 quarters, it made sales of 5.8 billion euros and a profit of 1.2 billion euros. That's a profit margin of over 20%. Ferrari cars are not your everyday cars. They can cost more than $300,000 each. And Ferrari doesn't make a lot of cars, less than 9,000 a year. What makes Ferrari super profitable is that it sells a small number of exclusive cars at really high prices. In 2022, it sold only 13,221 vehicles worldwide, while other mainstream car companies sell millions. Ferrari's customers are usually super rich people who are not as affected by economic downturns. This makes Ferrari's business more stable than regular car companies that struggle when the economy goes up and down. Ferrari is famous all around the world for its fancy sports cars and luxury brand. In 2022, it made about $419,000 for each car it sold. Even famous investor Warren Buffett agrees that Ferrari is something special in the car industry. The big difference is how much Ferrari can charge for its cars, the profits it makes, and the people it sells to make Ferrari's business much more stable compared to other car companies. Ferrari's symbol is a prancing black horse on a yellow background. Minor details of its appearance have changed many times, but its shape has remained consistent. Ferrari became a public company in 1960, and from 1963 to 2014 it operates as a subsidiary under Fiat SPA. It was spun off from Fiat's successor entity in 2016. In 2019, Ferrari was labeled the world's strongest brand by financial consultancy Brand Finance. Now let's redirect our attention to the present stock performance. Ferrari has a market capitalization of $63 billion with each share priced at $336. Over the past 5 years, the share price has surged by an impressive 241%, a noteworthy achievement particularly within the automotive industry. The company has a dividend yield of 0.51% and a payout ratio of 46%, which is considered safe. Dividends are distributed on an annual basis. However, the 5-year average dividend yield stands at 0.64%, suggesting a potential overvaluation of the stock price. Notably, Ferrari is experiencing robust dividend growth, with a significant increase from 51 cents per share in 2016 to $1.90 per share in 2023. Representing a compound annual growth rate of over 20%. Ferrari is currently engaged in a share buyback program, offering an additional avenue for rewarding shareholders. From 2015 to the present moment, the shares outstanding have decreased from 189,000 to 181,000, making a reduction of approximately 4.5% over 8 years. Although a modest decline, it underscores the company's dedication to rewarding its shareholders. Simultaneously, Ferrari is diligently managing its debt, demonstrating a noteworthy reduction from $797 million in 2015 to $207 million in 2022, while growing revenue and sales. Analysts have assigned a hold rating to the company, forecasting a 6.1% downside to $316 per share. This graph illustrates a consistent upward trend in stocks bought by institutional investors over time. During the last quarter, institutional investors purchased shares worth $896 million, while selling only $447 million worth of stock. In my opinion, Ferrari is a great stock. The only thing that I don't like is that it pays dividends only once a year. If we overlook that, it's a great company with a very strong moat and balance sheet. Economic downturns don't affect the company as much as they do others, because Ferrari's customers are super rich individuals who are less affected in weak economic conditions. Yes, I also think that the share price is a bit high at the moment. However, if you are buying to hold it for 5 or more years, this is not so important, because in my prediction it will go up a lot more. I own shares of the company and plan to acquire more when the price drops below $300 a piece. Ferrari definitely is part of my long-term dividend growth portfolio. This is my opinion, and with it comes the end of the video. If you found it valuable, please give it a thumbs up and consider subscribing for more dividend related content. See you in the next one. Bye bye.